Good morning, everyone. This is Bruce at Fleet Capital Management. It is July 9th, 2022, Saturday morning. Beautiful day out here in Bellingham, Washington. Today should be pretty quick. We're just going to go over some trend analysis. There's not too much more other than that I want to show you today. As always, the video is intended for educational purposes only. Discussion of security is not a recommendation to purchase or sell. If you subscribe to this YouTube channel, you'll always have access to all of the videos. If you have any questions or comments or suggestions, please email me, bruce@fleetcapitalmanagement.com. Okay, before we get to the trend analysis, I want to go to two of our largest holdings. There always seems to be a bit of confusion with these. I understand they're complex instruments. But let's just go over it real quick again. Here is NAPR. You may or may not have this investment in your portfolio. It is one of our largest holdings, but if you don't, this applies to everything else. So let me show you. This is as of Friday afternoon. The fund is down, or the investment's down 9.85%. It's based on the NASDAQ 100, or the Qs, which is down twice that. It's down, well, almost twice that. It's down 18%, 18.5%. So once again, on a standalone basis, if we have an investment that's down 9.85, but the underlying index is down 18.53, that's pretty darn good, but that's not where the story ends. This has a 15% buffer, which is this gray area, and I've put a blue bracket around part of it. This dark line is in fact the investment, NAPR, and this lighter line is in fact the Qs, or the NASDAQ 100. If today were maturity, even though we're down 9.85%, we're in the buffer zone. So this would reset back to zero minus the internal cost for this investment. I have that highlighted down here. So really what you're being protected by is not a full 15%, it's 14.21. Or another way you can look at it is, the price wouldn't go back to zero, it would go to 0.79. So those are their internal fees that you don't even see, but they are there, and I point them out. But the point is, if today were maturity, the NASDAQ would be down 18, you would be down 0.79%. If the NASDAQ continues to fall, which it certainly could, I'm not sure that it will, but it certainly could. And let's say that the NASDAQ was down 30% and your investment was down 20%, which is a reasonable spread. At maturity, you would get back approximately 15% of your 20%. So even though the NASDAQ's down 30, you'd be down approximately 5%. I hope that makes sense. So these are fabulous investments. I know it's hard when you see your account value lower because we have to show it that way by SEC regulations. But in reality, you're fine. As long as we're in this gray area, you're fine. And even if we were to dip a little bit below the gray area, you're fine. You're going to get, the vast majority of that money back. My opinion, and this is an opinion or a projection, is by the time we hit maturity, which is March 31st of next year, I don't even think we're going to have to worry about this. I think we'll be worried more about hitting our cap than hitting our buffer. So there's that one. The second one, which is the second largest holding in our portfolio, is BAPR. Remember, anytime it has a B, it only has a 9% buffer. The other letters have a 15% buffer. This is based on the SPY. This is as of Friday. The fund is down 9.66. The S&P 500 is down just shy of 14%. Pretty good spread. But the point is, if today were maturity, we would actually be down 0.79. So same thing. We're fine. We're just a hair below the buffer. I suspect that, strongly suspect that we will be out of here and more to the upside in the months ahead, especially towards year end, and we will be worried more about the cap than we are the buffer. Right now when the market's down, you're always worried about the buffer. When the market's up, we want this thing to get as close to 16.3. We sell it, get into a new one with a new cap, and we continue to ride it up. Okay, Hopefully that makes sense. If it doesn't, all you got to do is call me or email me and we will check on that. Before we move to the markets, always want to remind you, if you'd like to do a Zoom meeting with me, it's really easy. Go to our website, fleetcapitalmanagement.com, click on more, click on Bruce's calendar, select a date and time that works for you, and you will show up on my calendar and we'll do it. And it's always available. Don't hesitate. If you have questions, don't hesitate. Okay, let's go to the market. When we look at the market, we're going to primarily look at SPX, which is the S&P 500. And when we do trend analysis, there are quite a number of things I look at. Just to remind you, this is the 20, 50, and 200-day moving average. We are still based on this in a bear market. That's one thing I look at. Another thing I look at is my custom ATR symbols, those dots. We are still below the red, which means we're still clearly in a down market. That is a second thing that I look at. Look at what happened back here, back in May. We rallied back up. Remember, I call these things resistance when they're above us, like a ceiling, and then it fell back down. It rose back up. It pretty much stopped at the ceiling. It fell back down. It is going back up, but we're really close to that ceiling. Now, will it fall back down? Or will we break through? Well, I don't know, but I will tell you, if you pretend you can see a line from where my cursor is, and we kind of connect the bottoms, those are higher lows. So we're in a very short-term uptrend, but again, the 20 is below the 50, 50 is below the 200, we're below the 2 ATR dots. On the RSI, which is something that I look at, we're still below 55. I want to see us above 55. Down here on the TSI, I want us to be above 0. These are all things that indicate trend changes. We're not there yet. Also on the ADX DMI, a little bit more complex, but I certainly want to see green above red, and I'd like to see gold above 25, which is that line. So again, based on, I like the price action that we've been seeing. We always love to have some up days. It was nice seeing some up days in there. But technically, we're still in a downtrend. Okay, I'm going to come back to this in just a second. Move over to another thing that I look at, which is called Go No Go Pro. Remember, the dark purple is representing a downtrend based on about 17 underlying indicators. The light pink is a weak downtrend. So we went into a weak downtrend, back into a downtrend, back into a weak downtrend. Okay, that's okay, but we really need to get to these amber bars first, because that normally signifies something may be changing. Now, this is a shorter term grouping of moving averages that I look at. The other one was 20, 50, 200. This is not. This one is 8, 21, 50. So the 8 is still below the 50, but it sure looks like it wants to cross above. They're both still, excuse me, the 20. The 8 is still below the 20. I want it to cross above, and I want the 20 to cross above the 50. If that happens, we're in a nice little short term. We've switched, and we'd be in a short term uptrend. There's some other indicators that I look at to help me decide if we're in a downtrend or an uptrend as well. There's something I'll just show you. There's something that I've started doing. I created this little spreadsheet because it just makes it easier for me. Every one of these things on top, this is the go, no go trend. This is the 821 moving averages that we just looked at. There's an indicator called the DO and the wave, which I haven't shown you today, but those are all indicators. There's a confirmed up or down trend. There's the DMI, RSI, TSI, ATR, those are the dots. What I do every single day is I plot where are they? Are we below those dots? Yeah, we are. Is the TSI still below 0? Yes, it is. Is the RSI below 55? Yes, it is. So I use this so I can see at a glance if something is changing. The very shortest term signal I have is called the wave. And a couple of times, even Friday, that was up, but that's not a short-term trend. That's giving me an indication that there's possibly some upward rumbling. I have these two boxes together because if the DO and the wave are both up, okay, now I'm starting to take notice. And then lastly, if the DMI is positive, Now we're in a short-term uptrend. So all this is everything that I've already shown you just on one page, so I can easily take a look at it. One other thing I'll show you on this chart is this is a daily chart. This is a 30-minute chart. This is what I use for my options trades. I did send out an email showing you how they're doing since June 1st. That's when I completely changed the system, and man, they're just doing great. I've done 4 trades for clients. Prior to that, I did 6 trades in my personal account. We have 100% positive batting average right now, which is wonderful. We're averaging about 17% per trade. We will have a losing trade, but what I did in creating this system is when we do have a losing trade, my objective is to close that trade when it hits break even, meaning we haven't lost or made anything, or a small loss. That is the objective. I know exactly what I need to see for that to happen. And I never want to have a loss, but hopefully we're going to have a losing trade or a trade that goes against us. And then I can show you that its loss amount was very, very light. But I use a 30-minute chart because those are very short-term trades. Our average hold is 3 days. Our max hold is 7 days. It actually expires in 7 days. I don't know that I've ever held one 7 days, maybe one. It's usually 2 to 3 days. So this is some analysis. I won't go through all of it with you on this one. Maybe I'll do it on another one of how I select those options trades. One other thing I want to show you, going back to this chart, most of you will remember the symbol ARKK. ARKK was our best investment for about 2 years. It made us best, meaning it made us the most money in those 2 years. And it has been doing nothing but declining. It's actually down 70%, which is just extraordinary. And I remember when I sold this investment, because of technical analysis, I did get a phone call from 1 or 2 clients that said, "Are you nuts? Why would you sell the best investment that we own?" And I said, because the charts are telling us to. And so we did sell that. Now, remember that based on ATR, which is the dots, okay, if the price is below those 2 levels, we are clearly still in a downtrend. Well, what has happened in the last 2 weeks is now lime colored or green dots are underneath, but still negative downtrend dots are above. So this is now split. And that I call a no trade zone. That means it might just be going sideways and it could break below or it could break above. So remember, it has to be both of these darker color dots indicate we're in a downtrend. Here we're in a darker and a lighter means we're in a no trade zone, which means just be patient. Don't do anything yet. But with that said, if I look here, the RSI, I like to see that above 55. It's at 57 right now. That's good. If it's above 57 for 5 days in a row, or above 55 for 5 days in a row, that's a very good bullish signal. Down here, another indicator I use, DMI ADX, is green. I just need to see this gold line start to come back up and cross above the red line. That would be a bullish signal. And then the true strength is above 0. So with all of that, it might be a little too soon to say, but if we get this above these dots and all of my indicators are still showing a bullish trend, for our group 1 clients, which are a little bit more aggressive clients, I am going to put a 5% position into this with stop management, because if this is starting to break, we're going to go. And then a couple other things. If the 50 crosses above the 200, which, you know, there has to be some pretty significant price rise, we may even double that position, because if Kathy Wood, the manager of this fund, is right, this fund's going to make a lot of money again in the future. So I just want you to know I am looking at it. I'm in a no trade zone right now. I still don't have my 20 above my 50. I need to see that. I need to get above these ATR dots, and then these other indicators need to show positive. So I just wanted to show you a potential trade on the horizon Lastly, I sent this out, but I will show this to you again, and I will show you these tabs are investments that I make. So here are the options trades I've done in this bear market since the 1st of June. I just started tracking it since the 1st of June. I've been doing it before that. And again, if you look down here, we have a 100% win rate. We're averaging 17.8%. And our average holding frame is 3 days. Here's some more trades I did in my own account, same kind of thing. And then I've got more trades. Each one represents different types, but I will keep a spreadsheet on every group of investment that I make going forward, because it makes it very easy for you, for clients, to see how different types of investments are going. When I put stocks back into the more aggressive portfolios, I have different signals that I use for stocks. I'll show you those. And on and on. When I put more ETFs in client portfolios, you'll see them under the ETFs. And when I use leveraged ETFs, which have a multiplication factor either going up or going down, which we will be using to enhance our returns, I'll list it here. So I think this is going to be good. It's definitely good for me. And I think it's going to be good for you too, because I can show you these as they expand out, and I can show you how each different type of investment, which is called attribution analysis. Let's say our portfolio is up 20% and you want to know, well, which types of investments are representing the majority of that gain? We can now slice it up and show you. That's attribution analysis. We will also be able to do that if we go into a new downward market, which I don't expect, but if we do, we'll be able to see what's causing problems. But I think I've taken care of that. I don't think that's ever going to happen again, to be quite honest with you. Very last thing is, here is where I suggested I believe the market bottom is. We don't know yet. It's still too soon. We could come back down and test it and then do our real serious bounce. But we did come down here and we kind of tested another support level, and we're bouncing. So we'll see. It's too early to tell. But I'm hoping, obviously, that was the market bottom. But as you can see with some of these new things I put in place, for those of you who are trading the options, it no longer matters if the market goes down. We are profiting on a downward market. And I have other tools to profit even more on a downward market, but I just haven't gotten the signals yet. Everything is based on signals. Nothing is based on opinions. And I think this is going to serve us exceedingly well going forward. I'm pretty excited, probably more excited than I've been in a very long time, maybe even a couple of decades, about what our future holds for our investments. So that's a story. If you have any questions at all, any comments, any concerns, the best thing you can do for yourself is to pick up the phone and call me, or shoot me an email, or go to my website and schedule an appointment, so that I can show you what's really happening inside your portfolio, not what you think is happening, because you may see it down a certain amount, but that amount may be a false amount because we have guarantees built in. So I know I'm a broken record. Please reach out to me and let's have a Zoom meeting and let me show you. So that's a story. Have a wonderful weekend. I will be back with you Monday morning. Bye-bye.